Good morning and welcome to the Wavy Tunnel Market Outlook for June the 15th, 2026. Before we start, let's have a quick look at the disclaimer. This presentation is for educational purposes only. If you just take a moment to read through the rest of that, and then we can begin to have a look and see, because a few things have changed. So overnight we had the agreement to extend the ceasefire to be able to negotiate an agreement between all parties and the opening of the Straits of Hormuz on Friday. So we'll see. The market seems to believe that, and you'll see that reflected in the prices that I'm going to show you now. Today, from an economic perspective, there's a few elements. I don't think anything too exciting. What we will do is be waiting for this week, Wednesday. There it is, FOMC, new governor's first meeting. So market will be in anticipation of what is going to be said there. So that's that from that perspective. Let's go and have a look and see where we are in the markets. That's where I wanted to be. So obviously, with what's happened overnight, rally in all currencies against the dollar taking a bit of a back seat, everything's correcting, so we can have a look and see that that's there. All this is still in place, it's still intact. I would think the market wants to break free of what it's been in the clutches of for the last few months, but I think there's an air of skepticism. So you can see that yes, we are rallying, but it's not too aggressive. I think we need further confirmations and final agreements, and then people can get on with the business of moving on. So until then, let's have a look and see where we are. So the 4 hour was showing that we were still correcting. We need to look and see what happens here. So 116.16 is a pivot point now. We can see that markets, bungees are trying to support this move higher. So we could come into 116.60 area, which is a previous area of resistance. And there it sits. And we can go across from there, and there it is, and there it's sitting. So there's your strong area of resistance. We are here, we in an element of wait and see, and so what does that coincide with? A 50% retracement of this move here. So you've got a small decision point here, you've got a further decision point there, and then we need to go and see, where. So are we going to now extend higher, or everything is supporting? So you can look to see what happens in the 1575 area, and if there's a pullback into the wave in the tunnel, the wave is through the tunnel. There is a small amount of divergence, so it might support a small pullback, and there are some gaps overnight in the market, so be aware of that. The fact that we haven't got a deal is as well. We've got an agreement to negotiate a deal, so a lot can happen between now and Friday, so we just need to be careful. So that's the euro. Should we just dig down a little bit? I've tried to trade in the futures this morning, and it's so choppy. It's very difficult. Look at this price action. It's very difficult. So that's why I suggest set out a broader agenda, be more patient, look for opportunities, and I think that would be serving you still for the next while until we sort of settle down. And let's go into the sterling. same thing. That one is showing a little bit more strength, but then it was weaker because of all the political turmoil that it had been going through. Market is a little bit divergent, so I would be watching areas and levels in this area up here, which coincides with that there. So 134.75. You've got trend lines, you've got the wave through the tunnel, you've got the tunnel, you've got possible pullbacks. So yes, we could be, as long as we now staying above, and you see we come, there's our target, which we might have achieved already. So let me see, extend that a little bit, and we can see a 50% pullback is back into the tunnel, and a lot of the way fill the gap. As long as we hold here, so 134, we'll keep putting pressure on 135. Failing that, we have a deeper retracement and come back into 133.60. Yen, that's always good to look at because of that 160 area, and a lot of the, a lot of interest in yen because of the carry trade. There's a lot of talk about interest rates going higher there this week. You can see in this market, even with what we've experienced overnight, muted move. So I would be watching, but we don't want to be trading this one, but just for the sake of, to see how we consistently go down and analyze. I would think above 160 is still tricky, and the market is going to be in grindy wait and see mode, see what's going to happen with the monetary policy meeting, interventions, and we could be looking at a bit of relief, blow the steam out. Depends what happens to the dollar as well. If the dollar continues to come lower, if what comes out of Wednesday indicates that the bias is going to be looking to be easing rather than increasing, which the market is now has been factoring in rate increases, there's a lot at play. So I think we just need to be patient and vigilant this week. Let's have a look at the Canadian dollar. We'll go through all these in our morning roundup and touch on things that people, this has just been a grind higher. So good example of how you've got to, just be patient, set up your trades, look for pullbacks, look at measured moves, look at your wave, look at your tunnel, look at the indicators, what they're telling you, and you could see that this move here, so there's still legs in this, so I would still watch around this 139 for a slight move higher. But again, there's a lot of moving parts this week, so let's just be mindful of that. I'll just bang through a few things because we're going to meet later today. Let's go to the futures. And you can see, so we had a gap overnight because I watched the open, and markets just gapped higher and they've just continued going higher, divergent. Need to make a decision. We've pulled too far away from the wave and the tunnel. So we know what's going to happen, right? Wave's got to catch up, or price has got to come down and consolidate. We've into this big area here, which we've indicated before. So be mindful of that. The price action is nasty, so I will show you that. Trying to trade in this is very difficult. Very little to unless you're still applying the buy the dip theory. But the price action is not great. The spreads are wide, so just be careful. Just be careful. Difficult to give you ranges at this point, other than what I've set out, and look from above and look at the market in a more broad perspective, like S&P. Look, massive gap, stretched away, blew through all these things, coming into the next area of resistance up here at 76.31. So that would then also, let me have a look here. So this fib is wrong because it needs to be on that bottom and it needs to be on that top. So we're in that zone that we always like, and but we're in no man's land between these two areas of resistance. I'll bring across the options, which shows you again. So we're bumping into this area where there's gamma. There should be gamma that should be supporting this. And you can see that we oscillated a little while this morning around this 5.5. So use that as a pivot, 35.57. But anything can happen now. You've had SpaceX that was launched Friday, successful. There's going to be people piling into that. There might be people getting out of the Mega 7. I don't know what's going to happen. Here's the gap all the way down here. So we can still extend up here before we fill this gap, but we will fill this gap. So let's just be careful out there. Sorry, I showed you that was the Nasdaq. This, I should show you the S&P that corresponds. There's your gap. You can see that overhead resistance there corresponds with this overhead resistance here. And in the market, usually in these zones, there's chop and you stay out. You're looking for establishing above or below these areas of gamma support and resistance, etc. So that's the S&P. The other two as well. Obviously, gold is back off to the races because it can now breathe. Focus is shifted to a degree. This is interesting. I would look at this area here, and what I'm going to do is here, because I can see there's a move, and so if this area breaks up here, we can extend there. Where is that? That's the top. So watch this area here, 43.83. If we start establishing above there, it starts opening up 47.20 again. A little bit toppish, a little bit divergent. Again, stretched away too far. Wave trying to come through the tunnel. So you know where we need to look and focus now in this area here at 42.80 odd. So keep an eye on that level there. Oil. Wow. I told you, I always keep telling you that people like selling oil. They always sell oil. So, and that's been evident. You can see since we had the major spike and the move to the highs. There it is. It's been lower highs, less volatility, and then probing all these zones. You can see the gap that we've got here. We're now between this range. So now this is our range, 75, 85, and big 85. So a lot's going to happen. The normal rules for oil have changed because there's been a lot of disruption within the OPEC members. There's been loss of revenue. There's rebuilding programs that got to go on. So oil's going to be interesting. Oil, if all things stay equal, will go lower. Whether it breaks 75 now, I don't know. It eventually will. And we might then just default back into what we had before. Tight markets. You can see that this expansion after that explosion was, it's ever decreasing circles. So I'll leave it there. Remain vigilant. I would not get involved in the chop. Look at the broader picture. Look for levels above the areas that we've set out for possible trades. Keep position sizing small. Keep risk management tight. I will see you all this afternoon. Thank you.